Hello everyone. Today we are going to have a quick look on the history of the financial bubbles. One of the first financial bubbles registered is the Tulip mania. Tulip mania took place in 1936-1937 in the golden age of Dutch society. Dutch elites brought over from Turkey first tulip bulbs and seeds, and at that time it was perceived like a great scarcity. It kind of reminds me current fungible tokens where the scarcity is not real. So the Dutch high society started to speculate. They had certificates which guaranteed them delivery of the asset, and those certificates started to change hands with the higher prices every time. And if you look at the index those years, the speculation went on, and it reached the point where the price was around 100 times higher than the original price paid for those certificates. The whole mania took only 4 months, but within these 4 months you can see the huge increase in the value of those speculative assets. In February, bubble popped and started precipitously falling down. A significant bubble which happened in the 1720s is the South Sea bubble. South Sea stock was representing a share in the business of trading with South America from Great Britain. If you can look at the chart, there were smart investors who came to this business, and those type of ventures were done on regular basis. It's basically created the first stock market. When the traders bundle their capital together in order to send 10 or 100 ships into other country to exchange certain goods and bring them back, all the gains were distributed equally between the shareholders of this company. So the valuation of South Sea Company was reasonable at the first stages. When the smart money came in, then institutional investors pulled in, and there were forced sell-off in order to capitalize on the gains. Then the main public camp came in, and they took it to the whole next level, where the price of the South Sea Company went up 7-fold and collapsed almost as rapidly as it took off. One of the main components of this bubble was buying stock on margin. So basically borrowing money in order to buy stock. But one of the most important and one of the most interesting bubbles in the human history was in 1716. Campagna des Indes with John Law. John Law is a very interesting figure. He was born in Scotland in April 1671. He was convicted of murder. He fought in a duel for a woman and killed his opponent, and his sentence was death. He escaped prison. He moved to Netherlands, which at that time was center of financial market innovation, where he learned a lot but couldn't apply his knowledge at full, and he went to France. France at that time was finding itself in a very difficult situation. They had a huge debts accumulated through multiple wars, and they were looking for a financial solution to their problems. John Law came and provided the solution. So first, what John Law did, he created IOUs, which is very similar to the current fiat currencies. Those IOUs were backed by gold. In the second step, he created IOUs based on a trade. So every trade where the transaction already took place and payment was outstanding, he took those payments as an IOU note. The third step, he issued stock. He bought multiple companies during his time in power, and through those multiple acquisitions, the price of the stock went up precipitously. So what was so interesting and so unique about John Law in France? He had all the power. So he was representing government in collecting taxes. He was commercial banks. He was providing loans, and he also was the Federal Reserve issuing fiat currency. That was a unique position where you combine Treasurer, Federal Reserve, and commercial banks in one man. So for example, let's take Mississippi Company. Mississippi Company in New Orleans in the US was a place where multiple convicted prisoners were sent in order to explore this new unexplored territory. Earth by itself was worthless, as the people who were exploring this territory were dying from the diseases brought by insects in this swampy territory. 80% of the people sent there were dead by the end of the year. Nonetheless, the stock of this company was sold as something valuable, as something what had intrinsic value. John Law continued aggressive acquisitions of multiple other companies. And eventually, in order to keep his stock high, he even guaranteed the price of the stock. People felt they cannot lose. So people started to speculate because John Law was able to accept the stock of the company as a collateral. So people were able to issue debt and buy more stock on this debt. Stock would continue to appreciate, so they were able to continue and perpetuate this process. At some point, due to this guarantee, smart money started to sell stock because it was so exorbitantly overvalued that they wanted to get their cash. Of course, it brought all the society to the huge amounts of inflation, which John Law tried to enforce through certain rules, but eventually he lost his credibility and the whole system went down and collapsed. The fun fact about that John Law was actually able to escape, even though his wealth was dissipated. Most of the bubbles in the history have very few things in common: loose fiscal policy and buying on margin. If we take some modern bubbles like dot-com bubble in 2000, it was a belief that value of the companies and the growth of those companies would grow exponentially in perpetuity, which of course has nothing to do with reality. The bubble in 2007, the great financial crisis, was a full well causal effect of reckless monetary fiscal policy and low interest rates, as well as government backing up mortgage-backed securities. Huge amount of the houses in the global financial crisis 2007 were bought on margin, and people were expecting that assets would grow exponentially forever, so they would always take more debt, refinance, and buy more houses. That's how it was self-perpetuating, very similar to the history of John Law and Firma de Synthesis, Compagnie de Synthesis. At the end, for any government, it's very easy to overstep. If you have fiat currency, which is not backed by anything, like US dollar was in 1971, and then they went from this golden standard. They basically went from this golden standard because they were bankrupt. They bankrupted themselves with unwise welfare policies. They bankrupted themselves with Vietnam War, and that's why they were forced to get from this golden standard and make their currency fiat, which is not backed by any real money or any real value. This perverse incentive with fiat currency created more incentives for politicians to use to their advantage, promising to their voters more free stuff. As we all know, there's no free lunch. But in democracy, you can always vote for a person who can promise you free things. And that's what happened. Gradually, political system in US became so loose and corrupt that the current level of debt and deficits in US is staggering. You can see in another video which I made if I think that US stock market is a bubble, where I in more detail go through this topic. The January history shows that the human stupidity present throughout the whole history. As Stan Druckenmiller said when he went in the top of dot-com bubble into the market and lost $1 billion US, someone asked him, "What did you learn from this?" The answer from Stan Druckenmiller was, "Nothing. I knew I shouldn't have come there. I knew it was stupid. I did not learn nothing." Thanks everyone for watching. I will see you in the next video. Bye bye.